Yes, hello everybody. This is Ray from Ray's United, and I'm back, people. I'm back. Today I'm gonna talk about UK crypto ban. Well, not necessarily, but it could be heading there if we're not careful. Obviously, we have something which I believe that the UK must adopt stable coins or risk losing financial crown. So important because recently the Bank of England actually proposed to impose strict limits on how much stablecoin individuals and companies can own, which reportedly triggered a backlash from the crypto industry, which says the measure it risks stifling growth and putting Britain behind its peers. Listen, smash the like button where you're at. Smash the subscribe button, of course, become a member. Let's want this channel grow. Let's get to 100K very, very soon. And you're going to know everything because this is quite detailed. I took my time to do it just for you, of course. And when I come back, it's on. Yes, I'm back. I'm back. This is Ray from Ray's United. Listen, so this particular video, I've decided to choose a report that was written or an article that was written on Imperial Business School. That's the business school of Imperial College, London. And I believe you guys are going to find it quite interesting. And we'll break it down because this can affect everybody in crypto, not just anybody in the UK or Europe or America, but anybody or everybody around the world. So let's take a deep dive into it and let's see what this is all about. Let me put my picture somewhere there. Yeah, this is better. All right. So this article written by Laura Singleton on the 16th of September 2025. Yeah. So this article written by Laura Singleton is captioned "UK must adopt stablecoins or risk losing crown." Obviously, in the new report that was written, that's a warning that she gave. So I am going there to actually show you precisely what was said, and I'll just give you my conclusion. And of course, just bear with me for the next 5 to 8 minutes, and let's see how this one goes. Obviously, so this is it. The UK is in danger of falling behind its global rivals in the fast-moving world of finance, according to a new report on the rise of stablecoins. The UK economy is the only major market that has not yet introduced a stablecoin policy framework. The authors of the report warn that without decisive regulation and support for sterling-backed stablecoins, London risks losing its status as a key global hub for finance. The British economy currently accounts for around 3.5% of global GDP, 11% of the financial technology sector, and 40% of the global foreign exchange turnover. These numbers are huge. The report, Mind the Gap, How Stablecoins Can Secure the UK's Financial Future, led by Imperial Business School, found that whilst European Union, United States, Singapore, Hong Kong, Japan have all implemented dedicated regulatory frameworks for stablecoins, digital tokens pegged to traditional currencies such as the US dollar, the UK has yet to act. It warns that the lack of sterling stablecoin is forcing UK business to rely on US dollar and euro alternatives, exposing them to foreign exchange risks and embedding quote unquote digital dollarization in international commerce. It calls on policymakers to accelerate the creation of a clear framework of GBP stablecoins, incentivize high quality issuers to establish operations in the UK, and integrate stablecoins into domestic financial infrastructure. And obviously here there is a quote that says, unless the UK acts now, it risks ceding monetary sovereignty and financial leadership to countries that have moved faster to embrace this transformation. Without these steps, the UK risks losing its fintech leadership, driving talent and capital abroad, and diminishing its influence over the rules of global finance. Professor Giles Kemmler, co-director of the Center for Financial Technology at Imperial Business School and lead author of the report, said, stablecoins are no longer experimental technologies. They are becoming the foundation of the global digital economy. Unless the UK acts now, it risks ceding monetary sovereignty and financial leadership to countries that have moved faster to embrace this transformation. Obviously, the report shows that London has the talent, the markets, and history to lead the digital economy, but delay in implementing a regulatory framework for stablecoins is eroding that advantage. So now let's talk about the rise of stablecoins. This is where, it's so important, because I use a lot of stablecoins, which obviously in this case, Tether, USDC, and so on. And I use them and they're great. So obviously, if you want to transform your crypto into a stable coin, you can do it easily on exchanges and so on. So it's much, much better to have that in order to have a vibrant economy moving in the crypto industry. So the rapid rise of stable coins. Stablecoins already represent a market of more than 280 billion, dominated by US dollar-backed tokens. The rapid adoption by consumers and financial institutions is transforming global payments and financial infrastructure. Stablecoins enable lower transaction costs and faster settlements and promote financial inclusion by supporting remittances and expanding access to financial services for the world's unbanked population. The growth of this sector is helping traditional financial institutions bridge the gap with the digital assets ecosystem and reduce reliance on legacy IT systems. With major institutions from banks such as JP Morgan to Visa building their future business models around stablecoins, the UK's absence from this market represents both a strategic vulnerability and an economic missed opportunity, according to the report authors. So obviously, the report drew on insights from dozens of globally leading academics, policymakers, and financial industry practitioners. So obviously, I'm looking at this, and I can tell you here and now that I use a lot of stable coins, particularly USDT, in other words, Tether. And the crypto economy is such that, on a layman's term, without having to use any technical jargons, I can tell you that the stable coins, for instance, somebody like me who may possess a certain cryptocurrency, and I feel like, okay, in order to have to transfer or sort of convert that crypto into fiat, I'll have to convert it to say, for instance, USDT first, which is Tether, and then be able to transfer it into a bank account or something, whatever I want to do with it. Without that stable coin, I can't do it. But for now, because listen, I'm in the United Kingdom, I'm hoping that there will be a GBP stable coin, so as to be able to use that without having to pay so much. Well, when I use USDT, I don't pay a lot of transaction fees. But seeing as I'm in the UK, if I'm to use a GBP stablecoin, it will be much easier, much straightforward, because that's the currency I use. I wouldn't have to convert from the US dollar into pounds, which you would have to pay some transaction fee for. But if it's directly in GBP, which is Great British Pounds, it's much, much easier. So that's in layman's terms. So I want you to weigh in, because I know you guys are more knowledgeable than I am, of course. So just weigh in and let me see where your thoughts are. If the UK must adopt stable coins, or they have to, but they have to do it quick. Otherwise, they risk heading down the path where crypto becomes so restricted in the UK, because at the moment it's semi-restricted, because stable coins, obviously, they're capping it, so we can't withdraw a certain amount above a certain amount, and that's becoming a bit of a problem, and we can't do that. Do you know what I mean? So yeah, let's make this happen. All right, take care of yourselves. Name is Ray, channel's Race United, and the word is peace, and I love you. And tell me what you think about this video if I should do more of these ones.